Hello friends, let us start analysis for 25th November Monday. This is actually a video after a long time. Now I will try to post the videos regularly, so please follow on a daily basis. You will get to know the updates on daily basis. So from this week, from Monday 25th November, let us see what has happened. So as we usually do, we have to mark the important levels for previous day. Since 25th November was a gap up day, you see the first candle opened here above the previous day high. It is okay not to see any other levels below PDH because the market all was above the PDH only. So let's only mark the PDH, which is this one. Now market opened here and this was a big gap up, and the first candle was green candle, so bullish candle. So this is in our terms is a OD pattern, open drive pattern. The market is opening above PDH and it's a bullish candle, then you can go long. But today we cannot go long because the second criteria and the important criteria is the CPR is too wide. Wide CPR means sideways day. Please remember the small terms. Wide CPR usually is sideways day. So what we can expect is there is not much sideways day or reversal day. So yesterday was a big trending day, and please remember on every trending day the next day usually is a sideways day or reversal day. It is very less likely to be a trending day in the same direction because the CPR will be wide, and since it is open, the third reason is the candle is too away from the CPR and 20 EMA. So this is the third criteria why we should not go long here. Otherwise, if the CPR wouldn't have been wide, if it is average CPR and this candle opens somewhere near the PDH and becomes green, then it's a good candidate for going long. So today, so what we have to wait for reversal. So let us mark the top and bottom of the candle. We can mark it with trend line or a horizontal line. So this is the bottom and this is the top of the candle. Okay, first candle. Now first candle could not be broken till this got consolidated, and then here also it got properly consolidated. These candles could not break it because there is a wicks. So this candle has broken the this initial we can call it initial range. So initial range means this top is broken by this candle. Yeah, this candle has broken the top. Now here what happened, you have to carefully understand. After this small tiny candles, there is a breakout, and I have been telling that such breakouts are powerful, but not today because today's CPR is wide and most likely it will be reversed. Now how to identify the reversal? It has broken here. You have to wait for the candle which breaks the low of this candle, so which breaks this point, this point, like if you go here, yeah, so which this candle has broken it, so this is a false breakout. Now you got confirmation that it will be this candle, and this is a false breakout. False breakout, or you can say reversal or fake breakout. So what we have to do, we have to enter here the bottom of the candle, and stop loss will be days high, because in such cases you have to put the days high as a stop loss. Now let us see where is the, see the easy case. When you go short, I will give you a simple on the trading view. On the left side you see this symbol. If you are doing a short position, click on the short position, mark your level. If it is here, okay, marked it. Now this point, this above, when you are going short, above is your stop loss. So you have to put stop loss here, days high, above days high. So this is your stop loss. Now risk reward is 1:2. I have always told you, look, risk reward, it is mentioned 264. So you have to put it back till it reaches 2. So yes, this is 2. So this is your risk reward. So this is red thing is your risk, you entered here, and your reward is here. Here means this position you got your target hit and you are out of the trade. So first trade worked. Then after that I don't see any other trade, because even if this candle has broken the low of the first candle, since it is a sideways day, there is most likely that it will not go in one direction, so it reversed again. And here if you see, this is again a false breakout, but you should always remember the first false breakout is high probability, the second or third false breakout is usually a low probability. So there is no trade here, and that is also kind of parabolic. It's not like after consolidation it has broken. So there is only one trade today, and the target has hit and you're out. Okay guys, okay, let's do it for the next day also. Fine. We will start here. Now what happened, you have to observe this has here there is a gap border is formed. So this gap, you see this today's market closed here and previous day market here. So this gap is called a gap border, and this is a strong resistance or support. Now let us mark two levels as we usually do. Okay, high is here. So for analysis on 26 November, which is Tuesday, yesterday, let's find out what happened on Tuesday. Now Tuesday, when the market opens, you should be interested in checking either PDH should be broken or PDL. And PDL is very important level, because this is a gap border. If this level is sustained, you can go long. If this is broken, you can go short, because the next target will be this one, because this full thing is a gap border. To make it very clear, I will put it like this level and this level. This is a gap border. And market, usually market doesn't like gaps, so market will try to fill the gap, but that is in future. So we have to see how market tries to how market behaves near these important levels. Now Nifty opened here, the first candle, which is in no man's land. It is not either on CPR, not the PDH or PDL, so there is no entry on the first candle. Now you can see second candle got consolidated, third candle little bit got consolidated, 3, 4. After 4, 5 candles, this candle has broken the low of the first candle. You can treat this as what I have told you is initial range breakout trade. Okay, let us treat this as a initial range. You can create a box, top and bottom, and now this candle has broken that, so this can be treated as initial range breakout trade. After, it's not like it is first candle breakout also, and it is after few consolidation as well. Initial range, or you can say opening range breakout. So as we do, now there will be a short trade here. Now you will say there is 20 MA, there is CPR, still we are taking this trade. Yes, because the initial range breakout trade gives you the initial direction of the market, and moreover this CPR is not that wide. This CPR is narrow CPRs are not powerful CPRs. Market can easily break it. So this CPR cannot be given much importance. Only if it is average or wide CPR we can consider that as resistance or support. Now here we have to go short trade. Short, we are taking our short here. So you can keep your stop loss above the candle, okay, because above the day's high will be too big stop loss, and then 1:2 as we usually do. Yeah, this risk reward should be 2 here. So 1:2, then exit, like, and then see our target hit, or with this candle we should be out of the trade. So that's it. One trade was here. Then second trade, unless the market breaks this level, because this is a gap border, or takes a support, there is no trade. So there is no trade. And if you want to take a directional trade, like I told you, if market is in one direction, then you can take a trade at 20 EMA. So the market reaches here 20 EMA, but this candle was too big, 10-15 candle, so there is no good risk reward. Then market again came here. Okay, market again came this point. So okay, you can take a trade here or in this candle. This candle is not proper bearish candle. This candle 1105 candle is proper bearish candle, and it is below the 20 MA, and as a support there is CPR also. So there is one more trade here. If you missed the first trade, short position on this candle, there is a short position. Take a stop loss above the CPR, and 1:2, 1:2, yeah, 1:2 is a risk reward. So this is your this is your stop loss, and this is your target. So this target is also hit. So first trade was initial range breakout trade, which goes in the same direction, and second trade is 20 EMA retracement trade. 20 EMA here, if you see, this trade will not work because this is a big candle, and here there is no CPR on top or any support. Now here this, like, 1105 candle is a perfect trade. Okay, now okay, 20 EMA trade is done. Now how this market is behaving, it's trying to take the support. As I told you, gap border is a strong support or resistance. Market is trying to take a support, it could not break this level, so one can go long here, okay, on this. But you see, there is this gap border and there is this pivot also. When there is a series of supports like this, your stop loss should be below this, or you have to wait for a proper bullish candle, which is here. Okay, or you have to wait this. See, you can take the support, you can take the trade on this candle. This is this candle, this support, this target is for the second one. So this is first trade hit, second trade hit. Now third trade, if you want to take, I usually recommend only 2 trades a day, but if you want to take, you can take a third trade. Third trade will be go long here, put your stop loss below this pivot, because market has a tendency to go and touch all the supports. So there is this, you have to put the, let us mark this, go long. So long position, you can go long here, and your stop loss will be below this pivot, and twice the stop loss is your risk reward. Okay, look here, I have to just pull this till you get 2 here, risk reward 2. So your target will be achieved on this candle here. Okay, so all 3 targets achieved, and you should get out. There is no fourth trade. In fact, third trade also you should avoid. First 2 trades are like, if the first 2 trades give you your target, then only enter third trade. If any one of the first 2 trades or for both the trades fail, no, you should never go for the third trade. So just follow risk reward and follow the logic how market tries to behave. Now let us go on. This is yeah, this is 27th November, Wednesday. So this is your PDL. Okay, and This is your PDH for the day. Now one more thing you have to remember, PDH here is again a supply zone. From this point market failed to this, so this becomes a supply zone. And then supply or demand zone is not just a line, it is a kind of zone. Like here I will show you this one. If you take from here this point, this is completely your demand zone. Okay, because market this, first of all, this was a gap border, that is a strong support. Second, just to identify this, we can fill it with green color. Okay, this is your demand zone. Now this demand zone, look, market tried to break this. The first candle, if you see, it is on the CPR on today, and it actually broke the CPR, but there is no short trade. Why? Because you see long wicks is there, so this is not a properly bullish bearish candle. And even if you go short here, stop loss here, twice the stop loss, there is demand zone and PDL, so not a good risk reward. So when it comes here, okay, this point, this from here market reverse. Now you have to wait till market reaches this point, again the low of this. So again I told you, it's not exactly the point. Like if I draw a line here, you will wait till this line is reached, but it is usually a zone. So from this, the bottom of this solid portion till the bottom of this line is your, yeah, this is your zone. So when, and now the first candle is not red candle, but you see the next candle, the third candle, this candle, from first three candle it becomes a proper red candle. So this, in this case, you can treat this as a W pattern, because first candle can be treated as red, then it goes up, and then again whenever the market reaches to this point, then you have to take an entry. So entry will be here on this green line. And in such cases, now actually, yeah, as per rule, this is a low probability, because there is a CPR, immediate CPR on top, and there is a day's high here. So this is low probability. Although it worked, but as a setup, it's a low probability, so there is no trade here. And then you have to mark the top here. Okay, this was day's top, and this candle has broken this day's top. Now here also you can go long, but it's a low probability, because again, as I told you, there are 2-3 resistance. Like one is this pivot, second is this PDH, because this PDH is not only PDH, it is a supply zone also, because market fell from this point to this point. So this is also low probability, no trade on this, and that's it. Okay, from the supply zone it reversed. This candle is reversed, so ideally it can be treated as supply zone reversal pattern. Now one can go short here. Okay, this one short. This is what time? This is 1:55. Okay, not that late, you can still enter. So this is short, and the stop loss will be above the day's high, and twice the stop loss is your target. So in this case, yeah, twice the stop loss means again the CPR is on the way. In such cases you can have a trade, but it's break even trade. Now CPR if it would have been this target, then okay, but still you can take the trade. It has given you break even, not the full 1:2 risk reward. So that's it, guys. You have to read between the lines what each candle forms, and there are specific patterns. Like if the first candle is red, and then from the bottom the market reverses like more than 50% of the total range, like in today's case, then it is a candidate for, you have to again wait for the market to go to the bottom, then it will form W pattern. and the opposite way is M pattern. For that, the criteria is first candle should be green, and then from top market should fall at least more than the 50% of the range. So this W pattern, this is M pattern, and these patterns are more likely high probability on the wide CPR days. Today the CPR is not that wide, so that may be a reason that it failed, but only on the narrow CPRs, that's a low probability. On the average or wide CPRs, you can take the trade. So like this, there is open drive pattern, there is morning star pattern, shooting star pattern, then gap down rejection, gap up rejection. So all these patterns, there are different names, but you should understand the concept behind it. What happens, when is the maximum profit or benefit to the big players. We should only observe the market and trade accordingly. You don't have to form any this market, you don't have to expect anything. You have to just trade what is happening. Even if it is against your belief, you should take the trade, because market is something which is supreme. Like you never know what happens in the market. So basically candles will tell you what is happening, so you have to believe that. You don't have to be judgmental, or you don't have to take any stand. You have to be very pure, as in third party, and wherever market takes you, you have to take the trade with your risk reward, and minimizing your losses. That's it, guys. I'll keep continuing these videos as in when I can. I'll try to post daily videos, so please follow. Thank you.